in case trend continues. So my 382 is at 124.00. My target 1 would be 124.07. I always put a couple of pips above. This will cover the spread. Now different pairs might have different spread. Usually I put 2 or 3 pips above the spread just to have it as a gap, as a cushion. So if your spread on your currency pair is 5 pips, place your limit 6-7 pips above. If the spread of the currency pair you're trading is 2 pips, place your limit 3, 4, 5 pips above the 382. Now next place where we want to take profit is based on where the C is formed. Now if the C was formed here at the 382, when we pull the new main swing, look how this 382 now becomes 618. Again, very, very strong fib level. A lot of people would enter 618 in a buy trade. If they want to enter long, 618 is a very common area for people, for traders to enter the market, especially when now we have convergence of this low. The C will provide some support. C converging with that 618 level, well, this is strong support level. We want to profit above that level. Now this is where we place the second profit place. Now 123.78 is the 618. 123.83 would be my second limit. And then I can place my third limit all the way down, because since we assume this is trend reversal pattern, I would place my limit at the 127 extension, the last one. This is 123.19, 123.24 would be my third limit. Now, if you guys have a pattern on the big time frame, let's say it's daily Gartley or maybe head and shoulders, or a big pattern that you want to profit out of this pattern, or you can add some positions as limits for that big pattern. Now we fine-tune the entry with the butterfly of the smaller time frame, but then we can add additional positions as limits for that big price pattern that we want to trade from the bigger time frame. Now, I will give you an example of where and how we can find butterflies. Now, first, I want you guys to take a look at, I will actually delete all this. Now, we're doing an analysis and we see this beautiful butterfly. I'm sorry, this beautiful head and shoulders that it's being developed. And most of the traders, when price is reversing, most of the traders will have their first trade in the opposite direction at the right shoulder. Now we've been in an uptrend, correct? We've been in an uptrend, trading bullish, bullish, bullish. Now, the first pattern most people will notice is head and shoulders. We have the left shoulder, we have the head, price taking the previous low, eventually coming back to retest the right shoulder, and they use the right shoulder for their entry. Now, what if I tell you you guys can enter at the head? If we know this as area with strong resistance coming from a daily or weekly time frame, what happens if we can find a reversal pattern at the head? And here right now, the difference between the right shoulder and the head is not too big, but a lot of times we'll see a head and shoulders that will be formed more like this, and it will make a lot of difference if we can actually enter one trade here and then a second one here. Will be a lot of pips ahead. Now, first, I will delete those flips so you guys don't get confused. But what we're looking at is bearish channel. This is a daily chart. You guys can see how well New Zealand dollar has been trading in this bearish channel for a very, very, very long time. This is still since September last year. Every time price goes to the top, bounces, goes to the bottom, from the bottom goes to the top. Of course, we can have breaks, a little breaks above and below, but in general, price is trading in those ranges. Now, as price gets close to the top side of the channel here, we can start looking for bearish opportunities.